The chairman, Mr. Philip White, is not here this week, so I'm standing in for him. So I think we'll do introductions first, and to the far left, for those who don't know. Far right, sorry.
All right, I'm Sharon Haywood, Head of Digital Services.
Wendy Barnard, Democratic Services.
And I'm Jim Higginson, I'm Deputy Chairman of this committee.
Jonathan Davis, Finance Manager.
Andrew Wathen, Chief Internal Auditor.
And immediately in front of us is a representation from the Wales Audit Office.
Jeremy Saunders, Wales Audit Office.
And Norm Jenkins from the Wales Audit Office.
And there's a young gentleman today, he's sat up the back here with Nicky Wellington, and he's just observing proceedings, if you like. Would you like to introduce yourself? Shout down to us what your name and yeah, thank you very much. Thanks very much anyway for taking the interest in what we do. Right, fine, thanks for that. Are there any declarations of interest? Anyone? As and when, if necessary. There are no public open forum items. And item 4 is to note the action list from the previous meeting. Is that okay? Everyone? Fine, thank you. Item 5 is the draft statement of accounts report, which includes the annual governance statement, the attached appendices, and also the Welsh Church Fund accounts. Who's taking this one, please?
That's me.
Mr. Jonathan Davis.
Thank you, Chair. This report's an annual report to this committee on the draft statement of accounts for Monmouthshire County Council, the Welsh Church Fund, Mon Farm School Trust, and the Llanelli Hill School Social Welfare Trust. The accounts in front of you are those handed over to the Welsh Audit Office for external audit, and they come to this committee for review. The external audit of these accounts is ongoing, and it's due to be concluded in time for the final accounts to come back to this committee at the 12th of September meeting. Jeremy Saunders is here from the WAO today to update on any progress on the current audit, and I think he'll say a little bit once I've finished. I'll just run through briefly the key points to note here, because I know it's a long document in front of you. In terms of the main report, under paragraph 3.3 on page 110 of your pack, it notes that due to the shortened statutory deadline to publish the audited accounts, it's been reduced from the 30th of September to the 15th of September. Council were asked at their meeting last week on the 18th of July to recommend that this committee is given the delegated power to give the final approval of the audited accounts at the meeting on the 12th of September. It should be noted this is on a pilot basis, one-year basis. There is scope next year to amend the council diary to revert back to the old process, but that's for discussion next year. In paragraph 3.2, it should be noted that from the 2020-2021 financial year, the publication date for the final accounts will be brought forward even further to the 31st of July. So the approval process will need to be reviewed again at that stage. Appendix 1 to the report shows a summary of the key financial figures contained within the larger set of accounts. There are a couple of formatting issues which we weren't able to rectify, unfortunately, that you may spot. Just to draw your attention to page 116 of your pack. So in Appendix 1, it shows a significant increase in capital expenditure on asset management schemes of approximately 30 million. It's primarily due to the council's investment in commercial assets, those at Castlegate and at Newport Leisure Park. This directly impacts the amount of borrowing taken to fund this expenditure. So on the next page, you'll note that borrowing has increased by a similar amount to fund this. On page 118, the key figure to note there that skews the balance sheet figures this year is that there's a projected increase in the pension liability from 218 million to 268 million. Further explanation of this is in note 14.9 to the main accounts, and that's on page 77 of this pack. But that explanation, in summary, is that the liability has increased due to changes in the financial assumptions that the actuary has used to calculate the liability. The most significant of these being the discount rate used to value the scheme liabilities, which has gone down, causing an increase in the present value of scheme liabilities. Not proposing to go into any more detail on the accounts, so I'll hand over to Jeremy just to give a quick update on the external audit progress.
Quite timely, actually, because I had a meeting with John this morning, and the audit is progressing well. There's a few issues, as you'd expect auditors to find, which we're discussing with John and his team throughout the course of the audit, and we're planning to complete it on time, but there's no major issues to bring to your attention at this time.
Councillor Leeson.
Yeah, thank you, Chair. Well, quite honestly, I don't know where to start. You keep shouting numbers of space pages, I can't find where you are. So I got concerns about the depth of this, the depth in terms of paperwork on this report. As audit committee members, we've got to give it scrutiny, and I don't believe we're able to really give it that proper scrutiny with the amount of information. But I got a couple of questions that I'd like to ask. I asked one in full council last week, and I realised I'd asked in a different way because it was another page. You did touch on the I'll call the Newport Leisure Park and the Castlegate development. Now, on my page 92 or page 40 of the audit report, you've got two figures there: 80,000 for Castlegate and 62,000 Newport Leisure Park. Now, these are they in the previous financial year? Are they receipts? What are they? Page 92 of the whole pack from what I can see, and page 40 of the audit of the annual accounts. What does that mean? Or what do they mean, sorry?
I'll just find page 40 a sec on my version. Okay, I think this relates to the earmarked reserves set up for those funds. If I remember rightly, amounts were set aside in an earmarked reserve for each purchase to cover any future variances in the income from those investments. So these are specifically amounts set aside during the year to fund any future variances.
Chair, can I interject there? When the investment committee decided to go ahead with the Castlegate acquisition in particular, there was concern raised that if the main tenant there exercised their right under their exit clause, because there's two coming up, there's one imminently and another one in a couple of years' time, there would be a substantial void there, and there was concern that the income upon which the business case was built could suffer substantially. So the idea was that what we would do, because the accounts or the budget for that period had only anticipated a small amount of income, we would establish a sinking fund, if you like, or reserve that would cushion us against any major loss of a tenant there. Of course, under the terms of the agreements there, they've got to give us at least 6 months' notice anyway, so we'd have plenty of opportunity of getting somebody else. But nevertheless, it was that cushion that was required. So that's why there's a reserve there in relation to the Castle Gate.
Okay, thank you. I got a couple more questions, Chair. I notice in the report that SRS is mentioned as...
Could you confirm where you are in that report?
Yeah, okay,
please?
sorry. Yeah, I'm criticising and doing the same thing myself. Page 122 or page 70 of the annual accounts, it says the Shared Resource Service, Financial Administration of the SRS will transfer to Torvine CBC from last April. As part of the winding up of the current administration, it is possible MCC may incur a write-off for unrecoverable debt related to the bills raised by SRS Public, up to and including 31st of March. The probability and time of these write-offs remain uncertain at the balance sheet date, and therefore an FRS 12 provision of £86,000 has been made. Can you explain why financial administration has been moved to Torvine, and what is the FRS provision actually? It's 4 months now. Perhaps that could be a clear figure. Thank you.
I could answer that, but it would probably better if Sian did it, because she's at the coalface, so to speak.
Right, Sian.
When at the SRS's inception, we had certain authorities responsible for certain things. Monmouthshire was responsible for the financial ledger. So when that responsibility transferred over to Torvine, there were a number of outstanding accounts for Monmouthshire, schools, departments, a number of outstanding invoices that weren't paid, and that's where this debt has arisen. So we're not sure how many of those invoices are going to get paid, and they are by Monmouthshire departments, not SRS departments. This isn't really an SRS issue. It's a Monmouthshire financial control issue. So if we can get those departments to actually pay their bills, then the level of the write-off will fall.
Thank you for that.
Okay.
You have
Well,
you got another question?
yes, one final question, and it's to do with the senior officer establishment. I won't mention remuneration, establishment. I noticed that in January we lost our Section 151 officer. We don't seem to have one now. Is it a statutory obligation that we have a Section 151 officer? If so, when will it be installed?
Councillor Murphy, yeah, the answer is yes to that, but Councillor Murphy will explain.
At the moment, Section 151 officer is Peter Davis. He's carrying that role. At the end of this one, next week at Cabinet, his restructure will be coming through, in which case he'll be announcing provisions for the ongoing Section 151 officer role. I won't say any more, just wait until next week.
I'll do for now, thank you, Chair.
Any other questions on item 5, which is a draft statement of accounts report, please? No? Thank you. If not, we go to item 6, which is 2019-20 reserves usage forecast. Who's
as well, Chair.
Jonathan, yeah, okay, fine.
Okay, thank you, Chair. This is a periodic report that comes to this committee for review, and it shows the reserve activity for 2018-19 and also the projected use for the current financial year as forecast in the period 1 monitoring report. Paragraph 3.2 of the report, the first table shows the 2018-19 activity, and this is split between earmarked reserves, the council fund, and also school balances. So when we talk about earmarked reserves, these are reserves that have been set aside for a specific purpose, whereas the council fund is more of a general fund used to support the ongoing activities of the authority, but are not specific to one purpose. As you can see from the table, the council fund remained unchanged in 2018-19, mainly due to a balanced out-turn position on the revenue fund. The school's balances incurred a reduction in reserves of £408,000, taking it into a deficit position of £232,000. And earmarked reserves, there was a net usage of £761,000, which came about from budgeted use during the financial year. If you move into the second table on page 155 of the whole pack, this gives the forecast usage for the current financial year 2019-20. What it does show is that the council fund would be impacted by £2.4 million if the revenue out-turn position that is forecast at period 1 came to fruition. The council fund would need to support any overspend position that comes to fruition. The forecast usage of schools' balances shows a further usage of £618,000 at period 1. And in terms of earmarked reserves, a net usage of £580,000. It's probably important to point out in paragraph 3.3 that previously the Audit Committee had asked for further detail on the individual calls on reserves that had been approved, and we're talking here about earmarked reserves. And this is shown in Appendix 1 to the report. In paragraph 3.6, the reserve trend analysis over the last 10 years is shown. I think that's the first time this has been shown. And the table shows the decline in balances available across earmarked reserves, council fund and school balances. And it's probably more clearly shown in the graph on the following page. Paragraph 3.10 further down, and also Appendix 2 gives more detail on the actual school balances forecast to be in deficit, and also the recovery plans in place for these. It also, Appendix 2 in particular, shows the associated risks around these recovery plans, with those highlighted in red needing the most scrutiny. Finally, the key issue in terms of resource implications is shown in paragraph 5.1, and that is if the current revenue out-turn forecast for this year is not addressed, then the council fund would bear the impact of this and would fall below the recommended level of 4.4 to 6% of net expenditure. Happy to take any questions, Chair.
Are there any questions to that report? No? No one? Someone move we accept that report, then, please. Everyone accept that report? Thank you. Thank you very much for that. Item 7 is the annual improvement report for 2018-19, and Non Jenkins and a colleague are going to report on that. I don't know which of you or both of you are going to do it. Non is going to present that one. Thank you.
Diolch yn fawr, thank you very much. Pnawn da on a very warm afternoon. And again, my annual kind of visit here, if you haven't seen me, I haven't been here for ages now, have I? So anyway, hello, I'm still here. So this is basically, as you know, we have to, one of our duties is to prepare an annual report of all of the work that we have undertaken as a Wales Audit Office, and also summarise that of other regulators and inspectorates, so Estin and CIW, if they've done any work in the last year. So this basically brings everything together that we've done in the last year. And it's a summary of that, so nothing here is a surprise to anybody because it's literally a cut and paste of all of the reports that you've already had through your committees. But just to pull it together so that you can see, And also, as part of that duty, we have to come to a conclusion as to whether you're meeting your statutory requirements in relation to continuous improvement. And from the work that we have undertaken, and based on that, the council is meeting its statutory requirements in relation to continuous improvement. Really, unless you want me to go through any of the appendices in any detail, basically what we have done in Exhibit 1, which is on page 6 of the Annual Improvement Report, I'm not sure what page it is in terms of your papers, but we have summarised there the work that we did as part of the assurance and risk assessment that we did, which culminated in the audit plan for what work we will be doing during this next year at the council. And that includes work in relation to procurement and contracting, financial sustainability, which we're doing across all 22 councils, and hopefully we'll be able to report back locally to you as a council, but also bring some common themes together across the councils across Wales. And also we'll be looking at following up our SRS work from about 4 or 5 years ago, but from the perspective of each of the 4 councils and what the common themes are in terms of that, in terms of how can you further improve that to support your own transformation and modernisation going forward. So it's a forward-looking rather than a backward-looking piece of work. And then we did and reported in May, and we've also included some web links in there for you, so which we haven't done in the past, but this year we have, so that you can see the full report. You can click on it and go to the full report on our website. So you'll see that in May we reported back to you on the Wellbeing of Future Generations work that we did here. And we did that work, WFG work, across all 22 councils too. Not specifically on that particular issue. We worked with the council on this. It's very much a piece of work that we did with the council rather than to the council. And I think you chose the step this year in terms of which step we were looking at. And we did that and reported that back. As per usual, we do our annual audit letter, and our financial audit colleagues lead on that, and that was presented to you in December. A new one will come to you in the autumn. In May of this year, we reported back our service user perspective work, which was basically on the work that we did around how you deal with the compliments, complaints and comments from your service users. And we reported that back to you, that your citizens are mostly satisfied with the access and quality of customer contact arrangements, but the council could do more to take users' needs into account in their design and effectiveness. And again, we did that in a quite a facilitative way too. Now, every year, as you know, we have to do some certification because we are duty bound by the local government measure. So we certified you as basically passing both of your certification things, so for your improvement plan and your performance assessment. And then Appendix 1 and Appendix 2. Appendix 2 is the annual audit letter. And then what we've done this year in Appendix 3, you'll notice, is we've also summarised all of the national reports that we've done. So what I've just gone through now are the pieces of work that we've done here in Monmouthshire Council, but we've also done quite a lot of national pieces of work across Wales, and we've included the ones that relate to local government in the appendix there for you, with links to the report. So that's a summary, and CIW and Eston haven't done any specific work, so nothing to report in this year's report. Any questions? Happy to take them, but thank you very, very much to members and officers for all your support and cooperation throughout the year in undertaking the work. Diolch.
Anyone? Councillor Easton.
Yeah, just one question. It relates to the survey that you carried out in the last 12 months in various parts of the council, parts of the county. I can't remember specifically, but a lot of people were interviewed, but you finished up with very few positive directions from that. Do you find, will you be able to find a better way of interacting with the public in the future? But it didn't seem to provide the amount of interaction that you wanted. Some couldn't be followed up for various reasons. And I'm going on memory now from that report where David Wilson took it. It didn't seem to me to be a positive report. Not that it was poor, but it didn't seem to have the right number of responses it needed to have. And
I
David
can't
Wilson,
remember which one in particular it
well, the one that David
was
Wilson, he's away this week, I know. David Wilson, he produced.
We've done a couple of surveys, and that's why
Yeah.
I'm hesitating.
Right.
So we've done
Right.
one on service user. Oh, Matt can help.
Matt might help, yeah.
Yes, Matthew?
Yeah, just with the sort of the benefit of being present at the last committee, I think Councillor Easton, what you're referring to is the service user perspective
That's the one
review.
yeah.
And it was quite a difficult piece of work in many respects, but it was undertaken by Wales Audit Office to assess how well people had interacted with our compliments and complaints procedure. And I think what you rightly highlighted, it's quite difficult because people who compliment us don't necessarily know they've complimented us, and therefore it's very hard to engage and have that conversation, because if someone sends a postcard, a letter, they don't recognise they're part of a system, and therefore there's nothing really to ask them about. And then when you get into the issues of speaking with complainants, it was a challenge for WO, which I think they handle well, in terms of separating out people's views of the process from people's views of the outcome of their complaint. So the process may have run well, but the outcome of their complaint may not have still gone in their favour. I think as a result of the complexity of that, it was hard to get a large number of service users contributing. But I think we had about 25 or 26 people that participated in the interview, and well, recognising some of the limitations and difficulties, I think it still provided us with some sort of really useful learning that we can take forward.
Thank you for that. Any other questions? No? If not, then we go down to item 8, which is the implementation of recommendations 17/18/01, and I think that's thank you.
Annual basis, which I accumulate into an overall audit opinion. So those strengths and weaknesses, we identify in individual reports. Where we identify a weakness, we also comment or provide an audit recommendation to the service manager in order for them to improve their service provision or improve their financial management or stewardship within their particular area. At the end of the audit report, that individual audit report, my team sit down with the service managers and they discuss the strengths and weaknesses and the audit recommendations, and they generally agree those audit recommendations. So in 17/18, 96% of all audit recommendations which we made were agreed by service managers. So that's really good, really positive. The crux of this, and this is what this report is on, is how many of those recommendations were actually implemented during the year to demonstrate those improvements. So that's what we've reported on this within this report, Chair. As part of the process, because we have such a small internal audit team, we can follow up some work, and we follow up the mainly the limited assurance opinion work in more detail. And then we have to rely on managers getting back to us through a survey to see how well they've implemented those recommendations. So we rely on the honesty of service managers, which is absolutely fine. But at the discretion of, if we feel there's a problem or if we feel there's a need for further internal audit work, then we will go in and do a further follow-up. So a lot of this information is based on feedback from service managers. So if I can take members to paragraph 3.7, for 17/18 of all finalised reports which were reported on and followed up, There were 33 audit jobs, which included 355 audit recommendations, 66% of which had been implemented or partially implemented, and 19% had not been implemented. 5 were still ongoing in terms of percentage-wise. What I've done within the appendix, which I'll come to in a moment, Chairman, is a comparison of the previous year, 16-17, and just so members can see whether there's any significant difference in implementing those audit recommendations. And in terms of implementation of those audit recommendations, that should generate improvement across the board and help to provide better sound financial management and obviously improve corporate governance. With the appendix C's as well, then we've broken that down in terms of categorization. Limited, how many limited or significant weaknesses were actually implemented, and broken it down into business units as well. So I can talk about that in a bit more detail when we come to the appendix here. In terms of the significant weaknesses, we identified 79 significant weaknesses during 17-18, and only 49% of which were actually implemented when we had our feedback. This is quite disappointing, really, from an internal control point of view, because we've got 96% of recommendations being agreed, but only 49% of significant weaknesses being implemented. So if I come to the appendix A, that gives a definition of the opinions which we use, which hopefully members will be familiar with, because that's included in our quarterly updates and progress reports. Appendix 2 is a bit more detailed. That's how we categorise our weaknesses within the individual audit reports, so significant, moderate or minor, with a corresponding definition. Appendix B is what I've talked about in terms of the implementation, comparing 16-17 with 17-18. There are numbers there in terms of recommendations and percentages, so you can compare a year-on-year comparison. Appendix C lists the individual 33 jobs which we followed up, with the total number of recommendations on the right-hand side, and then the progress within the body of that table. So first column is implemented, through to no longer relevant, not due, or not implemented, or partially implemented. Next appendix, Appendix D, puts a few more numbers on the table about the number of significant weaknesses which have been implemented, but also moderate weaknesses as well. And then we've also done a comparison of implementation across the business units, Chair. I'm happy to take any questions.
Any questions of that report, please? Councillor Murphy.
Yeah, thank you, Chair. Andrew, I know we keep on bringing this up, but the ones that are not implemented, and I know I've asked this question before, but is there any sort of common current themes as to why implementation doesn't take place? Is it just resources or an unwillingness to do it? I doubt it's that, but you know, is there any particular theme as to why? Because it's a fairly high percentage that aren't implemented, and you would have thought if you've got a substantial percentage that have been agreed, if they'd have been agreed, then they ought to be implemented, didn't they?
That's our view entirely, yeah. Yeah, I agree with that. Thanks Councillor. I can't say we've identified a particular theme. It is disappointing to have so many agreed but not so many implemented. But my intention is to raise this matter through Peter, who's my Chief Officer, take it to SLT so that they're informed about the process, and hopefully that will feed back down through Chief Officer, Head of Service, Service Manager, in terms of the importance of implementing actual agreed audit recommendations.
Yeah, I mean, clearly that's the route, because you haven't got the resources to keep going back to check to see if they've done it, have you?
That's right, Chair. We've got a team of 5 plus me. We do some follow-ups. As I said, where there are limited assurance, but for the majority, we've got to rely on the service managers coming back to us.
Any other questions? No? If not, then someone move the recommendations, please. Thank you, Councillor Murphy, and the second by Councillor Easton. Thank you. We now go on to item 9, which is the contract procedure rules, implementation of internal, I'm on the wrong page, aren't I? Contract procedural rules exemptions. Andrew, thank you.
Thank you, Chairman. This is a 6-monthly report I bring to the attention of Audit Committee. Basically, the progress against how well we're dealing with our contract procedural rules and the exemptions. What happens is that we've got contract procedure rules in place for how we spend money across all services of the council. From time to time, they don't quite fit the requirement of the needs of the service area. So there's a process which service managers can go through in terms of the exemptions, and we log that within the internal audit team. So service managers have to request an exemption form from my team. We record it, and then they have to go away, justify why they're not going to use our contract procedure rules, get that authorised by their head of service or chief officer, and then report that back to us, and then we report that back into Audit Committee just to see if there are any trends coming up, or a particular person who's continually asking for exemptions, or if the exemption is not really relevant. And this time round, we've tried to strengthen the process by involving procurement, and we'll be doing that from here on in that passing the requested exemptions through to the procurement team to see if there are any corporate contracts that could be used, or any regional contracts which could be utilised, which service managers might not be aware of. So I thought that might be just important just to mention to you, Chair, before we actually go into the detail. In terms of the updates for the previous 6 months, this actually covers the last 12 months. So there are 2 periods involved, from June 18 to October 18, and then from November 18 to May 18. I've tried to keep it consistent with previous reports, so that's why it's based on a 6-monthly update. So for the first period, June to October 18, there were 13 requested exemptions. 8 were returned to us in the internal audit team and correctly authorised. 3 were no longer required, and 2 were not returned to internal audit. And I'll pick that point up in a moment when I talk about the appendix year. For the second period, November 18 to May 19, 8 exemptions were requested. 4 were returned to the team and were correctly authorised. 2 were returned to the team but had not been correctly authorised, and 2 were no longer required. And hopefully members will remember that previously, because we had quite a few exemptions which weren't being returned to the audit team or weren't being correctly authorised, I sent an email reminder out to all heads of service, talking them through the expected process, just to make sure that they were up to speed and they can then cascade that out to their service managers. So this time round, no major issues as far as the detail of exemptions is concerned, Chair. If I just run on to Appendix 1, that details the total number of exemptions we've received since we started this process and breaks it up into the reports that have been presented to Audit Committee. Appendix 2 is where we've previously had non-returns to Audit Committee. We decided to chase that up as best we could, really, to find out why the forms had not been returned or whether they had been correctly authorised. So this is a bit of a catch-up process in Appendix 2. And there's a mix of feedback, really. Some have been, it was just an issue with the service manager not remembering to send the form back to us, but they'd been authorised correctly. Some, unfortunately, the forms have been lost. Some people have moved on and no longer work with the organisation, so the form seems to have been with them at that particular time. And some forms weren't correctly authorised. So the reminder to heads of service kind of takes updates heads of service to make sure they're now on track, because this information probably predates the email I sent out. So that's just for information, really, Chairman, in terms of where we are and a bit of an update. Again, no major issues that are outside the email I sent through. Appendix 3 then goes into detail for the period from June 2018 to October 2018. Lists who requested the exemption,